Our Cardano prediction has played out almost perfectly. As you can see, we were 3 cents away from the intended target, and it looks like we are going to see a further rally to the upside. But before I continue, let me just first break down how we predicted this for those that haven't seen our last Cardano video. So I'm going to do that for you now, and don't forget to like, comment, and subscribe, because we're going to go through a lot more charts for you guys, and I'm going to show you how I am predicting this. Remember, make sure you like, comment, and subscribe. Now, as you can see, price has pretty much trended in a straight line for the week, right? So the question is, how did we know that price was going to move to the upside towards this key level, right? 74 cents. So we just shy of 3 cents from this target. So let me show you how. So firstly, I'm going to start off with a 1 month time frame. So from the 1 month, all we're trying to do is almost predict and see where the overall trend is going. This is all we're doing on the 1 month time frame. We're literally just trying to figure out, where is this trending? Is it a bull trend, which means is the market going up? Or is it a bear trend, which means is the market trending to the downside? And as you can see, this was clearly trending to the upside. So it means we're looking for our long entry, so our buy positions. And then we go into the weekly time frame, and this is where we can draw in our key levels of support and resistance. So for those of you that don't know anything about technical analysis, all we're doing is basically we're looking at previous price data, so history, to almost predict where price could go in the present. And how we do this is by these key areas of support and resistance. So we start off with our lowest level of support. So this is the lowest level that price has ever gone. And as you can see, the lowest level that we've seen price go is around 1 cent, right? Or 1 to 2 cents. And the highest level that we've seen this cryptocurrency go is $1.40, right? So now we can almost see where our highest level is and where our lowest level is, and anything in between this level is considered a range, right? So ideally we want to see a breakout, which will be perfect. Now, of course, if we're buying, we want to see a breakout to the upside, and because we're only in this for the long term, we do not day trade this, right? So our positions are simply hodls, right? We're only buying for the long term. So as you can see, we can see that price is actually in the middle of this range, but I'm going to get to that shortly. So now that we draw in our highest level and our lowest level, we can then start to look at key areas that price rejected off. Now, on the last video, we've already got these levels drawn in, but I'm just going to show you that in more detail. So let's start off with this first circle, right? So this is where price has broken this, which was a resistance, but is now a support. Why? Because price broke to the upside, retested, which now becomes a floor, and then obviously we saw the rally to the upside, right? But the most important thing is this acted as a strong area of support in which we saw price rally. Now, as you can see, when price did move to the upside, we saw price almost reject this support level. But as you can see, it did bounce, but then it obviously crashed right through, and then it moved back up to this resistance. And then as you can see, we saw price again reject this key area. So what we can see is this area around the 40 cent area is a very significant, right? For buy and sells, as you can see here. So when we broke through, it was a buy, but as you can see, this area of support, as price closed back below, it now became an area of resistance. Now, I know that may be confusing for some. I'm going to go over another video going over this in more detail, and I'm going to slow it all down for you. So as you can see, price pretty much ranged from the whole of 2018, 19, and 20. Well, 20 is when we start to see the trend to the upside. Now, what we saw actually is pretty much all cryptocurrencies do this. So Bitcoin, Ethereum, we saw this pretty much across the board. Now, as you can see, when price started to trend to the upside, we saw the break of, again, this significant area, this 33 to 40 cent area. Very, very significant, as we can see from previous price data, as you can see, right? So from a technical perspective, all we're paying attention to is this area here. So remember, look left, structure leaves clues. Now, as you can see, price broke above. We almost started ranging at this key now support area because price is broken through. And then let's go on our daily time frame so we can actually look at what's actually happening. So as you can see, we almost have a bullish pennant pattern here. So price is almost ranging, and then we see the breakout right to the upside. So this is where we predicted price will go, and as you can see, price has rallied right to the upside, almost like magic, right? Now the reason why we don't just look at price straight from the daily is because, as you can see, we do not have any recollection of where price could go next, right? So even when we zoom out, how can we predict where price is going if we don't have any previous price data to use in order to predict where price will go? And this is where a lot of traders actually go wrong, right? Now let's go back on a weekly. Wow, so much better. So now we can see where previous price data is, and we essentially use a Fibonacci retracement tool to not only predict where price would go, but we also use again these key areas of rejection, as you can see here. So I'm not going to confuse anything for you guys. I think I'm going to leave Fibonacci for another video. But as you can see, when we use this Fibonacci retracement tool from a highest high and lowest low, we can see that we're up against a 50% Fibonacci tool. And again, the 61.8% is one of the most significant levels, and as you can see, that's between 80 and just below the 90% level. So we're definitely going to be keeping an eye on that. But surprise, surprise, even when we use the Fibonacci tool, we can almost see the break of this, almost imaginary trend line here. So we're showing how many confluences we can add to this in order to predict where price would go next. And this is a classic breakout pattern, and it doesn't get any more perfect than this, especially when you saw our last video. So what are we going to wait for now? Now, I'm not going to get into that just yet. What I want you to do is like, comment, subscribe below, ask any questions you have below, and then I want you to watch out for the next video because I'm going to show you and use this strategy to predict where price is going next. And this is going to be an over 100k profit move for us, right? So I want you all to like, comment, and subscribe, and always seize the day.